But moving on from the company to Manav Chopra, Director Technical Analyst of Nuvama Instl Equities, joining in to talk to us about how he views the markets from where we stand right now. Manav, hi, thanks a ton for joining in. You've put out a bunch of reports and we'll talk about those because stocks in the IT pack seems to have taken a cue from that report and have ran up quite sharply, actually.
Yes, I wanted to give credit because it was 10 or 15 days ago, if I'm not wrong. Manav might have the exact date, wherein he put out that buy call on IT. Nobody quite thought the IT stocks will rally. And they've had a fabulous run.
You've had a bunch of very happy clients, Manav.
Yes.
And a promotion due.
Very kind to us.
But just before we go into IT, a quick word on how comfortable are you with where the Nifty stands right now? New record highs, the 5 days markets have seemed very stable. The VIX is controlled. It's been gradual, the up move. The breadth may not be very supportive, but we've seen sector rotation, large cap assuming leadership. It's all working for us. Do you feel like further upside in the near term is a given?
Yes, very much. So, I just want to phrase it in a simple two parts. If we look into the markets pre-election, we did witness a lot of laggards coming from the frontline space, let it be the private banks or the IT, Reliance. The heavy lifters were actually being the underperformers of the market. But what has happened post-election, the significant breadth of the market has improved drastically. We have seen the market movers actually take the leadership, starting from the private banks, and now what we are witnessing in IT. Reliance is near its all-time highs. Larsen is also basing out along with some frontline infra names. So the participation post-election results on the heavyweight Nifty 50 names have been very, very strong, which wasn't the case prior to the election. It was more or less like a polarized kind of a rally, and the market breadth was actually deteriorating from the frontline space. But currently, when we look into the picture, it's far more broad-based, which give us a very strong confidence that the current rally is likely to resume from the current levels too. Our base case for the Nifty on the upside should be close to 25,000 to 25,500. And I think the larger participation for the upside in the markets would be seen from the IT space. That's when we published our report on the IT. But going forward, I think we will be seeing a sector rotation. I think that has largely been the case for any bull market in general. But within the large cap space, the leadership, which was missing in the IT since past few months, we would be seeing that coming back, and off late that we have seen the witness. For a very short-term perspective, my sense is that 23,000, 23,500 will remain very strong supports for the markets. And going forward, I don't expect any meaningful correction coming in. So one very important data that I don't see any exhaustion or a short-term topping out for the market. Also, when we look at the global market charts, everything seems to be going into a scenario where the momentum and the rally continues towards 25,000 and 25,500 levels.
Got it. Okay, Manav, but great call on the Nifty 3-4 months back, great call on IT a few days back. Now, I'd love to understand, are you still constructive? Because we're not talking when you release the report, but a few days after. So there's a bit of a rally that has happened. Are you still constructive?
Very much. If you look at our long-term perspective on IT, our base call is that, we'll be expecting new highs coming into the IT index. That is our first base case, which is roughly at 39,000 for the IT index. And the next higher upside target is close to 42,000. So we are looking quite constructive for the IT index for next 6 months and more than that. If we look into the long-term perspective of IT, it has been in a larger uptrend. The last few months, after the IT index topped out in the month of Feb, we witnessed 3 months of intermediate correction. This correction phase was nothing but a short-term pullback in a larger uptrend, and the kind of a reversal that we have seen in the month, post the election in the month of June, that revalidated and reconfirmed the last long-term thesis for the IT for the sector in general. The IT index took 3 months to decline from 39,000 to 32,000 levels, but it took one single month in the month of June. It exceeded previous 2 months highs. So, largely these are some qualification criteria when a sector is in a larger uptrend. The declining path is more slow, more grinding, but when the recovery happens, it happens actually much ahead of the time and very, very quick in span. Obviously, there were a lot of short squeeze that played out, but the larger theme still looks very much intact. Within this space, we have also witnessed early leadership coming into the names like Tech Mahindra. This was the first large cap stock which have also exceeded its giant highs. And going forward, my base case for a stock like Tech Mahindra, we're expecting targets of close to 1800, 1900 levels. So my top pecking order within the large cap is going to be Infosys and Tech Mahindra. Infosys also has formed a very strong structural bottom, and on a long-term model charts, the stock indicates a near-term target of close to 1800, which is close to its Feb highs, and thereafter we head to intact for the IT is very much positive, and I think going forward, next 6 months will definitely belong to the IT space. Within the mid caps in IT, we like Persistent System and Naukri.
Persistent and Naukri. So, Manav, fair assumption that if people are just listening to you right now and have not read that report, Naukri at the current market price, Persistent at the current market price, Infi and Tech Mahindra should be bought for the next 6 months?
Absolutely. I think that is our medium-term perspective. We are looking at for a horizon of at least 6 months, and even from the current levels, within the large cap space, we see an upside of 15-20%. But for the mid cap Persistent System, when we're looking at the larger picture charts, I think the breakout that it has recently played out, it seems quite visible. The Persistent System is headed towards 5,500 to 6,000 levels. So there's a reasonable upside that can be witnessed, and particularly in last 4 sessions, the kind of move that most of these names have witnessed, it definitely indicates that there is some strong buying that has witnessed into it. And largely, the other part, one of the data sets that we were looking into, majority of the FMs, the mutual funds are kind of underweight IT. And imagine if an index which is coming close to the all-time highs and coming near the result season, if any positive tailwind that comes through, and that could actually propel the markets to much higher when we see some upgrades coming in. But largely speaking, yes, there is a reasonable amount of scope for the IT. Even the mid cap IT, we see an upside of 20 to 30% from the current zone.
Manav, we'd have loved to have a longer chat with you, but we're completely out of time. But I cannot not ask you about 2 other notes that you put out. One was on tire and fertilizer. Your top sector picks here between tire and fertilizer, and the timeline that an investor, a medium-term investor, should be looking at to holding these stocks.
Great. So I'll start with the tire as a space. The auto index in past 1.5 to 2 years, have seen one of the best rallies of last 5 years. And this within this space, we have seen sub-sectors within the autos, being in a league of its own. Auto and we haven't seen even a 50-day test in auto index post October 2023. So it has been last 1.5 years of a very strong rally with mild correction. In fact, tire as a sector, has witnessed an intermediate zone of corrections where the stocks decline over 15%. And comes near a 100-day average. There is an accumulation pattern, and then resumes its uptrend with a larger upswing, which not only exceeds its previous highs, but usually we see a rally of 40% coming from the 100-day average. So this has been the test and the formations of tire stocks. And lately, we've seen how CEAT and Apollo tires, which are our top bets, formed a strong base around 100-day average. And have started to witness an early signal of breakout. So from here, my upside for CEAT is close to the levels of 3,700, which is still 30% from the current levels. And Apollo tires, my upside target is close to 720. So in general, when the markets are at 24,000 levels, it's very difficult to look for the ideations coming for a very high risk reward. And tire definitely suits that space very well. The other part is on the fertilizer space, which we had already initiated at early stage. But largely, that is a theme that I'm looking for next 6 to 12 months again, where we've given an upside of at least 50 to 100% long on the fertilizer space largely. Pre-election, post-election, very strong accumulation results, accumulation patterns, and the fact that early breakout on the monthly charts, basing out, largely is indicating that there is limited downside. And now, we have witnessed a small brief correction, and the fertilizer as a space has started to base out for the next leg up. So, these are two sectors from the mid caps which are providing a very high risk reward entry. And within the fertilizer space, my top picks is RCF, NFL, and Chambal Fertilizers.
Got it. Manav, so good talking to you and great calling really on IT, on the Nifty, and we'll watch out for the tire stocks as well. But thanks so much for talking to us today.
Thank you.
That's the view from Manav Chopra of Nuvama. Constructive IT even now, 30% upside.